Everyone. In previous lecture, we have discussed about profit and loss account, and we have seen that how and why company they prepare financial statement or profit and loss account. And we have seen Schedule 3 format, that how Schedule 3 format is implemented while preparing profit and loss account, and what is the importance of Schedule 3 we have discussed. And after that, we have discussed about revenue and expenses, how we record revenue and expenses in profit and loss account. Today, we will be discussing about balance sheet. We will see that how by following Schedule 3, we can prepare balance and what is the importance of balance sheet. Why companies, they prepare balance sheet. So we're discussing about balance sheet right now. Okay, so basically with of balance sheet, what company displays their total asset, that what amount of asset company has purchased during the year or in previous year. And also with the help of balance sheet, you can find out the equity and debt of company, that how much fund company has raised and how company has raised the money from equity shareholders or from lenders or from different securities, right? So you can assess the position of asset and also you can assess the position of debt and liability. So basically from balance sheet, what you can do, you can find out the soft fund from where company has arranged the fund, and also what you can do, you can find out the application of fund, that where company is using their money. So balance sheet tells you the status of these state line items, you can say. So source fund, what can be the source of fund for any company? So if I talk about source of fund, what generally if I'm starting a business, so what I can do, I can invest my own money, right? So here we say it as a owner's capital. We say it as a owner's capital. When any owner, they invest their own money in business, we say it as a owner's capital, or you can say it as a share capital. Now let's suppose I have to start a business where I need 10 crore rupees, right? And right now I'm having only 2 crore rupees with me. So what I will do, definitely I will invest this 2 crore in my business. After what I will do, I will try to raise money from some other parties, right? So there is another method you can do, you can raise money from public also, right? Now let's suppose if you want to raise money from public, you have to comply the norms of SEBI, right? You have to go through with initial public offerings and you have to accordingly raise the money, right? So there is another method, that is share capital method, right? If you want to raise money from public, then what you have to do, you should have good track record profit in last 5 years, last 10 years. You should have specific turnover which is specified by SEBI. So this is another matter. Generally, small companies, they are not allowed to raise IPO. So if I take example of Zomato, simply what Zomato has done, Zomato has raised money from public. So Zomato is working past 12, 13 years and they have shown good track record of their business. So that is the reason they are allowed to raise money from public, right? If you want to raise money, so at least your business should be older business, and it should have good track record, good profit, good turnover, good customer base, goodwill, right? So then you can raise money from public. So this is another method. What you can raise money from public. Also, what you can do, you can borrow money from lenders, right? So you can borrow money from financial institutions. You can borrow money from banks. You can borrow from other parties, right? So here you can borrow money, and what you can do, you can issue other securities, right? Other securities means debentures, you can issue bonds, right? So in detail we will be discussing about these security. So this is what a source fund from where you will be raising the money, right? So here let's suppose what you have done, another is bank. You have borrowed money, that is 8 crore rupees from bank. Definitely you will be giving some security to the bank, and this is how what you can do, you can borrow money from bank. After that, once you have raised money, right? So you have raised 10 crore rupees for your business. Now what you will do, definitely while you have raised the money, definitely you will be buying some asset, and what you will be doing, you will be using that money for manufacturing, right? If you are a manufacturing business, if you're into manufacturing business, so definitely what you will do, you will perform some manufacturing activity, right? So after that, what you will do, you will apply this money somewhere, right? So let's say you have planned that you will be buying land, you will be buying building, right? You will be buying some furniture for your business, right? And accordingly, what you have done, you have applied this money. You have purchased land whose value is 3 crore. Then you have invested in building whose value is 2 crore. And after that, you have purchased furniture. Let's suppose furniture value is how much? It is 1 crore. So out of 10 crore, what you have done, you have invested your money in purchase of land, building, and furniture. And total you have invested, that is 6 crore rupees. Still, you are having cash with you, right? Now, you just let me know if you are buying machinery, if you are buying building or land, but you are not buying raw material. So how will you run your business without raw material? Is it possible to run your business? So what businessmen do, they keep some money for their raw material, right? They will be buying raw material. They have to pay salary. They have to incur some other expenses. They have to pay electric expenses. So what organization do? They keep some money for their working capital. We say it as a working capital, right? So here what business has done, business has raised 10 crore rupees. So 10 crore, what business will do? Business will buy some fixed asset. Fixed assets are those assets which are used to manufacture final product for any business, right? So these are fixed assets for company, right? After that, what company will do? Company will keep some money for working capital. They will be raw material. They have to pay salary. So that is the reason they will be keeping some money for their working capital. So here you can see what company has done. Company has purchased fixed assets of 6 crore and remaining 4 crore. What company do? Company will keep for their working capital. So here working capital can be raw material, it can be salary, and there are many other expenses which company has to incur. So this is what a meaning of source of fund and application of fund, right? So these source of fund and application of fund will be shown in balance sheet. In next lecture, we will be discussing about format of balance sheet, right? Thank you.